All right, guys, quick 2-minute sales training for you. Let's say you sit down in a mortgage protection appointment with a client that's making really good money and the need and the why just really isn't there, because they have assets and they have other things going on. And I actually just had a client the other day where this exact situation occurred. And this is something that I struggled with early on, were more so the high-end clients that were doing pretty well and have other assets and income, and frankly would be okay if something happened. The other day, the situation that occurred was him and his wife, they were in their upper 50s. I think he was 56 and the wife was 55. I think he was making about 20 grand a month. She was making about 8. They had savings, they have assets. They were set up pretty well. When I went into the appointment, I used to go in there and be like, okay, well, this is why you guys need it and da-da-da versus this. But I changed my approach, where now is, after we had taken the financial inventory and simply gotten a full assessment of their situation, I stopped and I was like, all right, John and Mary. So looking at the situation here, it looks like you guys don't really need this out of necessity. Because let's be honest, if something happened tomorrow, you guys would be fine. And they were like, yeah, we would be. I was like, okay, so correct me if I'm wrong, but I'm assuming the main situation here is, again, not so much out of necessity, where you guys need this, but simply more so from a position of strengthening your guys' current position and setting you and your family up in a better spot. Would that be a fair assumption? And they're like, well, maybe. And I'm like, okay, because honestly, you guys have done well, better financially than the majority of my clients. So really, I'm assuming the main focus here, and correct me if I'm wrong, but it's simply just not jeopardizing between now and when you guys go to retire. Would that be a fair assumption? And then I got a resounding yes. They were like, yes, that's true. I'm like, okay, gotcha. And I mean, really, because if you guys passed away, you guys would be fine. So, I mean, it looks like the main focus here is simply just making sure, again, nothing jeopardizes it between now and when you guys go to retire. And really the only situation that would occur is if you, God forbid, you did become disabled, or you had a heart attack or stroke, or some sort of unforeseen illness or disability, putting you guys in a position where you're not forced to liquidate that savings and more so leverage the insurance company's money. Would that be a fair assumption? And they're like, yes. And I was like, okay, gotcha. And what we ended up going with was a Mutual Omaha IULE for $450 a month. And I've helped out a few of those clients now. The number one thing and the most important thing, because when I got to the end of that appointment, they told me, they're like, listen, we had already sat down with 4 other guys and they were just trying to pitch us and telling us why they needed it. Where we appreciate your honesty. And clients appreciate when you're real with them. If they don't need it, you say it before they say it and take their power away. Where you just because they'd be okay doesn't mean they don't need the coverage, because you're simply just putting them in a better situation. The majority of my clients, maybe when they're a bit older and they're 50s or 60s, they're going to retire in 10 years, they're doing well financially. Typically what I found is either a 10-year term with living benefits, or it's a whole life product, an IUL. Those are really the only 2 instances that occur. If they're just looking for the cheapest options, living benefits, help them out with the term. But if they see the value in permanent coverage, cash value, getting interest on the cash value, and instead of letting X amount of money sit in savings, simply putting that into a whole life policy, then that makes a ton of sense too. And what helped me was acknowledging it up front before they said it and just being honest with their situation. So in summary, I hope this was helpful, because we're used to the type of client where it's like, you passed away, what would happen? Oh, we'd lose everything, we'd lose the home. Where, of course, this is not that type of client where they wouldn't lose the home, they wouldn't lose everything. They're in a good spot, but that doesn't mean they don't need it. They still need it, and they still filled it out, and they still requested your help. So don't get it twisted. It's your job where they're in a good spot to bring them from good to better and simply strengthen their position. Don't be afraid to be honest with clients, and don't be intimidated just because they're doing well. Everybody needs our help.